You are listening to chartingwealth.com for Thursday, the 15th of October, 2015. We're starting as we always do with IYY, and I like today. This is one of those days where I talk about, I told you so. We kept talking about a ceiling on this market, and we hit it today. We kept looking for something to stop the upward market. We guessed that it would happen about a day and a half or two ago, and in fact, it just happened today. We kept expecting where it was going to stop. And when we looked at the short chart, I'm looking at the long chart right now, we had a nice trend line going up. We're still in an up move officially on the big chart. But when we revert to our small chart, the big chart is a 2-day chart. The small chart is a 4-hour chart. What we see when we look at our 4-hour chart is we see that the market had been banging its head somewhere around, this is the total market, IYY is a total market fund, somewhere around 101, and it did do just that and then rolled over and has continued on down, particularly on Wednesday. It really pushed down on the 14th of October, crossed over going down in the early afternoon, and ended up the day. We always like to see the derivative oscillator moving over about the same time the MACD, the moving average convergence divergence, which is our indicator, crossed. So we have a confirmed down move, and we are starting to, haven't pierced yet totally, but about to pierce the 2-day trend line, which is, again, that'll be another big thing to push through that, unless the market bounces up in the morning. And again, it is in an up move officially on the 2-day chart, but down on the 4-hour chart. Now let's go and look. And just for the record, the total market was down 0.52%, so that's a little over 0.5% today. SPY, which is a Standard & Poor 500, it is down 0.48%, so about the same. We see the same kind of setup. We see the market bumping its head and starting to move over. Again, we see the derivative oscillators continue to gain speed, and the MACD is about as separated as it was on the big chart. And if we look at the 4-hour chart, we can see where it moved down pretty substantially throughout the day. It crossed over right at the end of the morning, beginning of the afternoon, and is in a confirmed down move on the short chart, crossing on the MACD and the derivative oscillator crossing over. So let's move now. We'll move back to our 2-day chart, and we're going to look at the Qs, which is, of course, the NASDAQ 100. It looks somewhat similar. It actually crossed through the 2-day trend line. We actually connected 3 candles, so that's 6 days worth of trends pushed over there on the price movement. And when we go from the 2-day chart to the half-day or 4-hour chart, we can see that it has just barely crossing over toward the end of the day going down. But we do have a confirmed down move now on the Qs, as well as the SPY, that is the Standard & Poor 500, and the total market. So let's range back out to our 2-day chart. And lastly, we're going to look at what? Gold. Oh, and for the record, the Qs was down just 0.16 today. So 0.16. Now, gold up 1.74, a nice kick up in gold. Again, if you will recall, we crossed over going up on gold back on the 15th of September. Gold rolled up until about the 25th and then over through the 29th, and on the 1st, that is of September, on the 1st of October, started moving up. Gold, we have a trend line that it is above. Nice, almost 4 candles connected on that trend line going up. Derivative oscillator heated up, and boy, the MACD diverged, that is, got wider apart from the signal line substantially over the course of this 2-day candle. Like I said, gold was up 1.74% for the day. On the half-day chart, what do we see? Well, we love our half-day chart. It continues to do well for us, continues to move up, up, up. Crossed over on the 5th of October and has continued to, it slid sideways for a little while, then went on up around the 8th or so of October. Then it backed up a little bit on us in the afternoon of the 12th of October, and then continued to move up and moved up substantially today. So If you got in gold and followed our 4-hour chart, you are one happy camper. Where did we end up starting on that crossover? The high. So if you bought in the worst time possible at 109.38, you're up to 113.28 today. In fact, the high was 113.95. So happy campers out there. If you were in your virtual trades on gold, you've got to be happy. Continue to follow that 4-hour chart. Now, you want to learn more about trading? If you haven't already gotten our 15-minute training, you got to get it. We need to hear from you. Take you 15 minutes. It's free. You can find it at our website. You can also find it at Facebook, and you can find it on Twitter. Facebook's probably the quickest, easiest place to find it, or even better, we'll email it to you. And in addition, if you email us CW, like Charting Wealth, cw@chartingwealth.com, guess what we'll send you in addition to the link to our video at Wistia? We'll also send you the layout that we use every day from freestockcharts.com. And what's so cool about that layout? Well, the layout's free and freestockcharts.com is free. And it's the best charting software you'll ever see. You don't have to load anything on your computer. It's all web-based. We love it. So, hope that you are having a great week. Hope that you are continuing to learn, continuing to study. We're happy to give you some education. We're not a stock calling service. We're an education firm. And we just appreciate you being with us at chartingwealth.com.